again, my friends. It is your loan guy, Troy with the Reichert Mortgage team, bringing you another mortgage market moment today for you. Appreciate you stopping in and checking this thing out. Always trying to keep you informed on what's going on in the mortgage world. Uh, what we're doing on this video is just making sure you understand what the rates are doing from a trend standpoint and what monthly payments are doing. Before we get to all of that, please do me a favor. If this information is important to you, like it, like this video, okay? Also, if you think it'd be important to someone else, share this video. It's really important that we get some of this algorithm stuff rolling on our YouTube channel, and we would love for you to subscribe. We got these mortgage market moments out there. We also have some informational videos coming out here shortly about what's going on and making sure you guys are taken care of. So remember, this scenario is conventional FHA, VA, those kind of things, but we are a broker. We have many different lending relationships and we have many different lending options for you. So please don't think that these are the only things that we can do out there. We want to have that conversation with you to talk about your unique situation and get you squared away. Now, also, interest rates do indeed change daily, sometimes multiple times a day. You hear me say that all the time. And today is the 9th of July. We're time stamping this as of 08:30 this morning on this day. Now, our scenario is as follows. It's a $450,000 home, primary residence, single family, and we do fold in $175 each for property taxes and homeowners insurance. We do not take into account any homeowners association into the housing payment. So your unique situation might be different. The house might be different that you're looking at. The house might be different on a refi than you live in. So we just got to make sure we're kind of doing a really generic apples to apples comparison across all the different loan products we're talking about today. So without any further ado, we're going to get rolling here. VA purchase, 660 credit score, no money down, 6.125 on that 30-year fixed is the interest rate. APR is 6.173 to 6.483. Remember that VA funding fee, if you have one, normally gets financed, and that's going to change your loan amount and your APR if indeed you have it and how much of a percentage you have to pay. Estimated monthly payment is $3,084 and change if you do not have a funding fee, up to $3,174 with the maximum VA funding fee. Could be different in there for you, but that's about the range you're looking at. Conventional purchase, 740 credit score, 10% down, 7.125 on that interest rate, 30-year fixed with a 7.311 APR. Estimated monthly payment is $31.39 and change. FHA, again, 660 is what we do on these government loans, just to give you a really good representation. 3.5% down is normally the minimum down payment on an FHA. 6.125 on that interest rate with a 6.889 annual percentage rate APR for that. Estimated monthly payment of $32.32 and change. Now, if you've watched some of my previous videos, you will notice that these numbers seem eerily similar. That's because since last time we did a video, the interest rates, all that stuff is level. Why is that? Well, we've had some moderately positive economic indicators come out since the last video, but really the market hasn't changed much and the interest rate hasn't changed much. We did today have Chairman Paul in front of the Senate, and he talked to Congress and the financial sector there. And the general vibe of this testimony was they're starting to see where they're stacking some economic data where changing interest rates in a positive direction, dropping the Fed funds rate, seems to be possible in the near future here, as early maybe as September. Now, Chairman Powell did say that they are looking for, again, more of this positive indicator type information to come out before they actually change the interest rates, but did not give a timeline for that. September is really just kind of an earmark potentially for when they might do that. If inflation and employment data trends where they've been trending, the inflation seems to be coming down a little bit, and the unemployment rates seem to be increasing, which I understand for individuals might not be the best thing in the world, but there is a target unemployment rate that is kind of in that sustainable range. So if we see some of those things, we might see the Fed's fund rate coming down in the near term, which could indirectly affect mortgage rates. That's what we're looking for out there. Remember, when interest rates come down, buyers come out of the market if you're looking to purchase, okay? So realize that even though interest rates are coming down, affordability comes down, buyers come on the market, and you might not have as much negotiating power with those sellers out there if you're looking to purchase. Now, if you're looking to refinance, that's all good news, right? We can absolutely access some of the amazing equity in a lot of those folks' homes with a lower interest rate and take a look at that for you. So please give us a call. Contact information is there. You can email me, text me as well, and we'd be happy to run through any scenarios that you're looking for. Troy with the Reichert Mortgage Team, your loan guy. Have a great day. Bye bye.